Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is November 23rd, 2023. It is Thanksgiving Day here in the United States, and as you can see, I'm trading at a new location here. I'm visiting family for the holidays, but happy to be here with you to kickstart your trading day by taking a technical look at three of the major currency pairs, including the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Price activities should be limited in trading here today. I imagine UK traders are maybe in the pubs, and the US traders are sleeping right now or just getting up to put the turkey in the oven. But we'll see what the technicals are saying from a bias defining level, from a risk defining level, from a target defining level. So let's get started. We'll start by taking a look at the euro versus US dollar and a look at the 4-hour chart. And I put the Fibonacci from this most recent low that was, I guess, Friday of not last week, but the week before. And you can see the market trended to the upside in trading last week, helped by that CPI data, which forced the price back above the 200 and 100-day moving averages. That's these moving averages right here. And we continued up into a swing area. The swing area is defined, well, you can go back to here, and then in trading last week came and formed this ceiling in through here between the 1.0878 and 1.08959 level. In trading at the end of last week, the price did move above that level, indicating a more bullish end to the week, and then continued the move to the upside in trading on Monday and into Tuesday. The high price reached up to 1.09644, kind of a random level, nothing really significant about this. We broke above this high going back to this week right here in the process. So you expect that they might find support buying against that level, and we did try to find support here. But the market ultimately moved to the downside in trading yesterday. The market moved down to test the 38.2% retracement of this move up from this low to this high. That was successful with the dip buyers coming in there, and you can see how the market shot back to the upside. And in trading here today on this 4-hour chart, what are we seeing? We're seeing the price now move back down to test the high of this swing area at 1.08959. If we were to move into this area, it would be more neutral. If we move below the 1.0878 level, the bias would turn more to the downside, and we look back down toward the 38.2% retracement for the next key target on the downside. Get below that level, and have traders looking again back toward the 200-day moving average of 50% retracement of the same move to the upside, and the 100-day moving average. Those levels come in at 1.07923 and 1.08102, above and below the 108 level. So that would be a significant support level on the downside. Again, also included in there is a 50% retracement of the last trend move to the upside. So, well, this cluster would be a big cluster of support. Conversely, if the price were to hold against this area, and so far we are holding that high at 1.0895, currently trading at 1.0903, the upside remains more of the bias for this currency pair above all the moving averages. And we look toward this swing area high going back to I guess that's end of August that comes in at 1.09448. Get and stay above that level, including getting above this high, would open the door for further upside momentum for the euro versus US dollar. So right now, testing key support area against this swing area right through here. If we can hold that support level, the bias remains more to the upside. Let's take a look at the dollar versus yen next. And if we look at the daily chart here first, we did move up to 151.909 in trading last week. That got within 3 pips of the 2022 high of 1.0994. You can see it back here. So that was a key 32-year high test, and we did find willing sellers against that level. On the way to the downside, we did move below this swing area target down near the 147.26 level, but as you can see, the momentum faded fairly quickly and ahead of this rising 100-day moving average, which, by the way, tested support here with the 200-day moving average, and right here. So the last two times that the price tested that 100-day moving average in this trend move to the upside this year, it found support buyers. So that is going to continue to be a key going forward for this currency pair. Please be aware of that. That is that will dictate short-term and longer-term bias if it were to be broken, or right now we're staying above it, so the bias remains more to the upside. We did move back above this little swing area here on the daily chart where, it should be in yellow, but there's a number of different swing lows and swing highs through here where the price came into this area and found either support buyers or support sellers. And the last time in trading last week, we had low here. So 148.68 is now our support. And as you can see in trading here today, again, we're on the daily chart. The low price came down toward that level and found support buyers. So the buyers remain in control on the daily chart. Let's take a closer look at this from the hourly perspective. And what we see on the hourly chart is that the price in trading here today moved to the downside here, only to find support against the rising, or the falling, I should say, 100-hour moving average. That's the blue line in this chart. Found support buyers against that level, and you can see it bounce back to the upside. So move lower and then move back higher in the dollar versus yen in trading here today. We are testing the 50% midpoint as the North American trading gets underway. That midpoint level comes in at 149.512, and as you can see, we did move above it, but back below it at 149.47 at the moment. If we can get and stay above that midpoint level, that would be more bullish. As you can see in trading yesterday, the price tried to move above that level but could not sustain. Staying in trading here today, we saw the selling on the break of the 50% retracement level. So this level is going to be a key barometer for our trading. 149.512. Get and stay above that. It's more bullish. If we continue to find sellers against this, we could see a rotation back down in trading in this currency pair. Finally, let's take a look at the sterling versus US dollar. And looking at the daily chart, the price yesterday moved back below the 100-day moving average. That's a blue line in this chart. And where did we go? We went right down to test the 200-day moving average. That's a green line in this chart. We found willing buyers against that level, forced the price back up toward the 100-day moving average, closing just below it in trading yesterday. And trading here today, we did see a rotation back to the downside, but that again could not be sustained. We're seeing the price rebound back to the upside, 125.39. Stay above the 100-day moving average, and the bias remains more to the upside. Let's take a look at the 4-hour chart in this currency pair. And here's the price action around the 100 and 200-day moving average. You can see how the price came down to test that 200-day moving average right through here and found those willing buyers against that level. And you can also see how when the price moved back above the 100-day moving average, you saw a change of the bias from sellers to buyers, once again pushing the market higher. We did move above this swing area defined by in the past by these again, this is 4-hour charts. This is going back to end of August, early September. But you can see how it was a support here and here, and then we broke below it here, came back up to it, and before moving to the downside. So that level is of significance in trading. The price did move below that level, could not sustain momentum, and then found willing sellers against the level right here before moving down to test 200-day moving average. So getting above this area and staying above this level is key. And if we're able to do that, then we'll look toward this 50% retracement. That's how the move down from this high going back to July 14th, the July high. Comes in at 125.886. And forget about that level, it opens the door for further upside momentum in the sterling versus US dollar. So there you have it. A look at the 3 of the key major currency pairs to kickstart your trading day today. My name is Greg Mikulski. Good fortune through trading. Bye-bye now.